Hello everyone, welcome to my channel. Let me just do a bit of introduction first before we start. My name is Z Cheng, or you can call me Cheng. I have 5 years of experience in trading Forex, and I have been a prop trader for my Forex funds for 2 years. Now, I'm sure why all of you is watching this video or probably search up for this video. You want to learn and trade Forex, am I right? You are definitely at the right place. So just sit back and relax while I guide you on the basic things you need to know about Forex. Before we dive into making money, we must first understand or know what is Forex. Forex stands for foreign exchange. It simply means currency trading. For example, if you want to travel to the US, you need to exchange your local currency to USD so that you can spend in the US. By that means you are already participating or involved in Forex. Whenever you head to the money changer or trade Forex, you will notice you have two different types of currencies having a slash in between. This is what we call base and quote. This is what you will usually see at the money changer or while trading Forex. The currency on the left, we call it the base, while the currency on the right, we call it the quote. Base is the currency you are buying, whereas quote is the currency you are selling. It is that simple. After you know what is base and quote, you may ask me, where do I trade Forex then? Do I go to the banks? Yes, definitely you can go to the banks. But if you want to trade Forex at the banks, you will need lots of money to trade Forex at the banks. Why is that so? It is because banks, they do not offer leverage. If you don't know what is leverage, don't worry about that. I will explain that later. The best place you can trade Forex would be using brokers. What is a broker? Broker is just like a middleman where it takes your orders and they provide leverage. Then they will send your order to the bank. We have two types of broker in the market. We have A book and B book. Since this is just for basics, I will not dive deep into that yet, just to keep everything simple to understand. After you have selected a broker, what's next? You have everything ready to start trading. You may wonder now, how do I start to make money? Relax. I know you are excited now on making money. Before that, you must learn up the skills to determine when is the right time to take a buy or when is the right time to take a sell. We have two types of analysis when it comes to trading Forex. We have fundamental analysis and we have technical analysis. Let's start with fundamental analysis first. What is fundamental analysis? Forex fundamental analysis focuses on the overall state of the economy and researches various factors including interest rates, unemployment rate, GDP, international trade, and manufacturing, as well as their relative impact on the value of the national currency they relate to. Fastbull.com is a website where you can get updated with the latest news on either the economy or Forex related. As you can see here, these are the news releases on the 2nd of June. We can see actual, previous, and forecast. Previous means the previous data. Forecast means what the economists are predicting. Actual is the real data when it releases. Fastbull will also show what kind of impact it has on market the moment the news has been released. It is very beginner friendly. Next up, we have technical analysis. Technical analysis is a range of techniques used to try and forecast future price movements of financial products based on historical price movements and patterns. As you can see here, we use different tools to analyze the market looking for what we call support and resistance. Don't worry, I will be teaching you on how to find or plot support and resistance in the upcoming videos. Let's learn about pip right now. Pip is a measurement of movement in Forex trading. It is used to define the change in value between two currencies. For example, yesterday the apple was selling for $5 and today it is selling for $6. So we can say that the apple has increased in value of $1. So how does it work in the Forex market? As you can see over here, we have Euro USD. Remember what you learned just now? Euro is the base and USD is the code. If you have forgotten, don't worry, you can always rewind. We can see that the Euro USD, it has 5 decimals behind. 1, 2, 3, 4, 5. 5 decimals behind. Some people explain pip in a hard way. Let me teach you the shortcut. You can start measuring pip from the second last decimal and you ignore the last digit. Why do we ignore the last digit? It is because the last digit is too small to be calculated. So we can see over here, the second last digit increased from 8 to 9. So we can confidently say it has increased 1 pip. We are going to study what is leverage now. Remember I mentioned the word leverage when I was talking about broker just now? Here we are. Let me explain what is leverage. Leverage is the use of borrowed money, called capital, to invest in a currency, stock or security. The concept of leverage is very common in Forex trading. By borrowing money from a broker, investors can trade larger positions in a currency. As you can see in this diagram, let's say we have $200. With the broker providing us a leverage of 1 to 50, it means that it will increase our buying power to 10,000 USD. So it's very simple. You take 200, you multiply by 50, you will get 10,000. Now, it does not mean that you own the 10,000 USD. It just means that the broker is borrowing you and it increases your buying power only. In simple words, it allows you to open a bigger lot size. We have lots of options of leverage in the market, up to a few thousand. Sounds crazy, isn't it? Leverage does not sound as good as it is, because the higher leverage you use, the faster you lose your money. So whenever it comes to leverage, please be extremely careful. Next, I'm going to explain what is lot size. Whenever we trade Forex, it is very important to know what is lot size. Lot size simply means how much you want to be involved in your buy or sell trade. The bigger your lot size, the bigger your profit. However, that would also mean the bigger your loss. So whenever you hear people talking about manage your risk, it also means managing your lot size too. I will be explaining the value of each lot size next. Right now, I'll be explaining the value of each lot size. We are going to start with the first one, which is standard lot. One standard lot means 100,000 units. And what would be the volume? It will be 1.0. So if you want to open one standard lot when you are trading Forex, you have to key in a value of 1.0. Do you remember that I was explaining on what is a pip? So now it's time for you to apply that knowledge over here. If you forgot, it's fine. You can always watch the replay. So whenever you open a standard lot, which is 1.0, if the price moves up by 1 pip, you will be profiting $10. But if it goes down by 1 pip, you will be losing $10. Next up, we will have the mini lot. So mini lot will be 10,000 units. The volume size will be 0.1. So if the price moves up by 1 pip and you are using 0.1 as your lot size, you will be profiting $1. Now, if it moves down by 1 pip, you will be losing $1. So that is the mini lot, 0.1. Next, we have the micro lot. So what is micro lot? Micro lot is basically 1,000 units and in volume size, it will be 0.01. So if the price moves up by 1 pip, you will be profiting 0.10. If it goes down by 1 pip, you will be losing 0.10. So you can see we have a nano lot over here. You can actually ignore this because this is actually too small in volume and this is only available in the micro account. That is it for this video. I hope all the beginners managed to learn about Forex more. I hope you have a nice day and please do not forget to like, share and subscribe to my channel for more beginner friendly videos. See you the next time. Bye bye.